All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Interesting market out there today. It's one that, kind of some of the normal chop that we have seen, but a little bit more to the downside as, some of the pre-market news really kind of led it here. But we've seen a little bit of a bounce back here as we've gotten into the close, at least coming off of the lows here. But pushing up here back to basically where the market's opened, right? And so we just, it's just not one where we're seeing the sell pressure take over to a degree that suggests, hey, you know what, the bears are really ready to go. And in fact, you look at some of these reversals out there; they're pretty juicy. So let's go take a look. Let's start with the challenge. Challenge here has a trigger here today, and 10:08. PM session, and the trigger is on Walmart, and it is a bullish signal. All right. So we have Walmart on a bullish signal. Here's the chart. We have the 3-7 upside crossover happening here with Walmart today. We have a stock that's been in a beautiful upward trend, higher low, and so everything here suggests that it's ready for its another move on higher here of at least two average true ranges. The setup's great. When we get to the options, we have a little bit of a different issue here with it, and here's the issue with the options. If we go out to the normal November options. The spreads aren't bad, they're very normal for them, but the delta relative to the price of the option is really low. What does that mean? Well, it means that we're just not going to make a whole lot on these options, given what we expect the stock to move. Why? Well, because they have earnings the day before these options expire, so earnings is priced into these options. We have a vega of 14 cents. And, with the implied volatility here at 25, it's not going to fall a lot, but it will fall about 2 to 3 points on further rally. And so we're looking at about a 40 to 50 cent risk on these options, about a 10% risk on the options due to the implied volatility. Now, that's not too bad if we had a pretty solid delta, but the delta is 12% of the option value. So we basically need Walmart to go up $1 to make 12% on our option. Well, a lot of that could get eaten up just by the vega and just by a couple days of time decay. So it's just not a very strong proposition here, unless Walmart just absolutely blisters and takes on off, right? So that option, off the table. Well, I can go a week earlier and look at the 20 or the 8th of November, and you see how much cheaper the options are. And looking at these options, these spreads have come in sizably. In fact, 10 minutes ago, these spreads were sitting very high. And I was planning to not make the trade until tomorrow because of the spreads, because we normally don't see them as high as what we have. But these spreads have come in quite a bit here for Walmart. They're still a little lofty, but I may go and pick up the 8th of November 118 calls. Those are what I'm looking at here. If that spread stays stable for just a little bit, then I'll look to go after it. But you can see that as it goes further in the money, the spreads widen out, and that's very normal. But that's not a showstopper there for it. If I come to the 1st of November, we have very normal spreads, right? Much more normalized spreads here for it, and but we're a little bit less than that 30 days out. So do I get a good risk reward? Can I, get a good, a good delta for the, vega and theta out there? And it's decent. It is decent. It's not terrible. And I'm looking at the 117s here and looking at doing about 3 contracts here of that. So those are the different options that I have in order to make this trade. And my initial thought was, okay, do I hold off till tomorrow and look to get into these 31st of Novembers? With the spreads coming down, but with the spreads having come down, I may be able to go get into them, here now. I do still want to make sure they're going to stay down because we are seeing them pop back up a little bit here, which is not what I want to, not what I want to see here with it. So I'm going to give it just a few moments here. If we go and we look at the chart on Walmart, we have an average true range of $1.65, which means we're looking at about a $3.70 move higher. So to put it up into that 121, 122 area is what we would expect to see that push on up into, here with Walmart. So that's what I am looking for. It puts a stop at about $1.60 lower, which is kind of near today's lows, here on that. So going to give it just a few more moments here, but looks like I'm going to pull the trigger. At this point, with this small move Walmart's made, I could go with the 118s. I could do that, but I think I'll go with the 117s, these $3 here, and look to get about a double on the trade, as it goes our way, and that will leave us with enough cash to make another trade on the next signal here that comes into play. So I'm going to go a little bit shorter than the time, that 30-day, but I'm going to go just one strike in the money to kind of compensate for that a little bit. And so 3 contracts here. I'm going to put a limit order in for 305. See if that fills me here. Yeah, 305 filled me, no problem there. So in on Walmart, the 1st of November calls at 305. All right, let me make sure the alert goes out here, and we'll go fill out the spreadsheet. So 1st of November, 117 calls. 305 and 3 contracts. On Walmart. There we go. All right, so if we come into the trade data, here we go. Ticker Walmart. Today's date 10/8 p.m. We bought the 1st of November. 117 calls, 305, 3 contracts. Stock entry price upon entry here had moved up a little bit, so it was about 10 cents lower than this. So 118.37 is what I have. 118.37. The average true range here on Walmart is $1.67. So 167, so that's going to give us our exit level, our profit level of 121.71, current price, or a little bit time delayed. There, our auto exit date here for if it were to go against us is going to be Friday, so 10:11 p.m. And then our auto exit date with it in our favor is going to be 10:16 p.m. And there we go. All right, so a little less cash in than what we had on the first 2 trades, and that's just because of the drawdown with the first 2 trades. But we get a nice little bump here on Walmart. We'll be back in the saddle. This should leave us about 1,100 to get into the next trade. Yeah, it does. So about 1,100 to get into the next signal that we see come in on the board. A lot of the stocks that had some downside 3-7 crossover action on it earlier today, like a Visa, right, has reversed. So we're not getting that same downside action. If we come into the scans and look at the bearish crossovers today, it was kind of full this morning. It's empty right now. And we've seen all of them, reverse that. And it's one of the big reasons why the scans, the parameters for challenge triggers in the morning are so much tighter than in the afternoon. It is simply because in the morning, the whipsaw risk is significantly higher. On the upside, we see crossovers in Vulcan, Valero, Coles, Gold. None of those have triggered here. I really like the Valero chart, and its breakout potential. I may go pick myself up a little bit of Valero into the close today, but, just personally, it's not a challenge trigger. We're seeing a nice little bounce in Coles today, off of its lows. We do have GLD with the upside crossover, but GLD has pretty much fallen all day. And GOLD kind of in the same position that it's been, but consolidation risk on them just a little too high, to signal for the challenge as they presently sit. And then there's Vulcan Materials here. This has everything the challenge algorithm wants to see, and some very good, very solid, technicals associated with it. But it's lacking in the upside potential, according to the algorithm, for, a 2 ATR move from this point. So that's why it did not, trigger here today. Okay. As far as, the market internals and all that go, we're still looking at bearish market internals, overall. Again, that doesn't mean all stocks have to go up or all stocks have to go down or it has to stay that way or anything like that. We've seen Walmart thrive in more bearish market internal environments. But it is something that, that does kind of look. You look at some things like a UPS today. That is one ugly chart. A FedEx, which I'm bearish on, and I think there's a possibility it go to double digits, and it just continues to drop. We just haven't seen it give us a fresh downside crossover, in order to go play it. We've seen Caterpillar snap back just a little bit here today. We've seen Boeing claw all the way back here today, off of the news here this morning and the, Southwest pilots and all of that. And those types of things, those types of news, elements, they tend to be very short-term, temporary. So Boeing is one that could give us a bullish signal as early as tomorrow. It is just shy here today of a 3-7 crossover, but it's one that, could be very close here. All right. All right, so going to go into the close here with some Walmart calls, and we'll take a look and see how things are set up here in the morning, and we'll run with that. Have yourselves a great evening, and we'll talk to you tomorrow. Take care.